Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 21st, and I want to take just a brief minute to discuss what markets did last week as we had another positive week in the equity markets. What a resilient market we've had this year, with the S&P 500 actually being up the least on the week, up 94 basis points or 0.94%. The mid-cap index, as measured by the S&P 400, was up 1.55% on the week, and the small caps, by measured by the S&P 600, while still negative year to date, were up 3% last week, and they were leading the way. And as we moved into the beginning of this week, all eyes in the investment community are on tomorrow's comments from Fed Chairman Jay Powell at their famous Jackson Hole conference. Investors are waiting to hear if what the market has already said about an 80% chance likelihood of a September rate cut by the Fed. They're going to be paying attention to his commentary to see if that in fact is going to be the case, that we are getting that rate cut in September. Now that is only going to impact on rates, remember, the short end of the curve, because the long end is more inflation driven. Then the Fed controls the short end of the curve on the yield curve. So when I'm speaking out longer, think 10 years. So if the Fed cuts rates and the market believes that inflation may tick up, you may actually see the 10-year move higher. That is, in fact, what you saw last September when the Fed cut by 50 basis points. The 10-year actually moved higher on that news last year. So that is kind of how that market works. And so what we expect is, we've been saying for a while, with the slowing jobs and the slowing overall economic conditions, that we would expect and hope for a September rate cut by the Federal Reserve Bank. And we expect to see that through. But as we are waiting to hear those comments this week, something very interesting has been going on internally within the market, and it's worth talking about. And it's a rotation right now, this week, from your high-flying growth names to your value names. And so year to date, value is a little bit behind growth from a overall relative return perspective, but a lot of that growth in the value names has been in a very limited field that's AI related, and there's been plenty of stocks left behind. So if you hold a value portfolio over a growth portfolio, or more value leaning portfolio, you may have seen some outperformance this week in that. There were a couple of days where the Dow Jones Industrial was positive while the Nasdaq and the S&P were negative. The S&P has been down for 4 consecutive days leading into today. So why that happens with the value sector going up while the index is going down can be explained. Ideally, you would love to see new capital come in to buy the value and growth equally at the same time, but realistically that's not what happens in market conditions. And so we've had a very good run in a lot of these growth names. Think of your Nvidias, your Palantirs that have had substantial growth. Microsoft have had substantial growth and make up a big portion of the index. The Magnificent Seven makes up to 30 to 40% of what the S&P 500 does from a relative performance basis on a day-to-day basis. So those are being sold, and then you have professional money managers who will sell those, lock in the profits for the year, and then go buy the more depressed or the value names that you find in the market. And that's why you'll see the overall index be down while the value sector is positive. It's because it's not an influx of new capital buying just value and growth equally. It is a rotation, and when you have that rotation, that is why you can see the index down while your portfolio may be outperforming that way if you are more value oriented. We don't know if this pattern is going to continue for a long period of time. We're going to monitor it very closely, but expect, if this is the case, if we do see some rate cuts in September that the market's pricing in, that's good conditions for your value names, your small and mid cap names to outperform, because they have been the ones left behind as we get what we call reversion to the mean, and we get those names performing. So if you have questions about how to navigate during a rotation or a value or growth to value rotation, we'd love to talk to you about that, or what to do with the Fed cutting rates. We're here. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.